Going to go over some of the charts here. Where are we at? Friday, July 27. So we're at the end of kind of the month next month. Um, you want to go back and look at history of August, um, August 87. I think Chinese had an issue, I think, in August 15. Things of that nature. August is usually a marking for either highs or lows for markets, like, outside of, even things like soybeans and things like that. So, and then September 30th of this year, every year, Kev, it's a financial U.S. fiscal end of year. So um, we'll see how things pan out here. What I'm looking at here is these are just arithmetic charts. They're free, updated daily. I just wanted to zip through a few of them here. It is shallow, okay, so obviously there's underlying bullishness, even though breath is beginning to wane. That's cash, but what I was getting, here's the Dow. Okay, the Dow is price weighted, not cap weighted, so it's languishing here. Transports, same type of deal, new high, but not, you know. We're running the small caps again. Here was one that caught my attention here. Here we have kind of a head and shoulders. You can have, vertical or horizontal neckline, whatever. But this is interest rate sensitive because utilities used to pay, decent dividends, that kind of thing. When you sucked your money away for 50 years, even at 3%, then it begins to go exponential. I know for you 20-somethings and whatever, 30 savings for 50 years, trust me, the decades move past pretty quick. All right, utilities. Then there was poor Nikkei. This is what happens when you bet it all on real estate and then put it into the market, and then you're not making babies. That kind of sounds familiar, like the United States. U.S. is having, or Mexico is having as many kids as Americans did in the 80s. So I think we're working on peak population here. The DAX was an interesting one too. Just you can draw a horizontal neckline across on here. Got kind of a head and shoulders. Now remember, these are monthly. All right, so this is, these are, and when it's done here, then it just rolls on over. But just looking at the big picture, because you're going back a couple of years right here, right there. Nasdaq. What you're doing is you're looking for a look above reversal type deal. I think. What was it? The Russell right here. All right. What you do is you move from the big caps. You can't move anymore, so you look for the junk. You run that while you're getting out. The smart money's getting out of this thing because we're working on a recession. So if you want to buy a home, wait. That kind of thing. I was looking at over some homes prior to coming out of the 2003 recession, because it goes commodity stocks, real estate, commodity stocks, real estate, commodity stocks, real estate. That's the cycle. Or you can start with real estate, that kind of thing, whatever. But that's the same cycle that's been going on forever. Monthly Russell, same thing. You see you get extended monthly bars here, so stuff's getting frothy. I'll go over commitment of traders tonight, but I just wanted to point out a few charts that I thought were kind of interesting. Here you have 30-year rolling over. We're in a 30-year cycle here, so we're going to have 30 years of higher interest rates, so stock prices may be stagnant, i.e. Japan. We don't have enough. The people don't have enough money. How about that one? And there's not enough people, so it was a Pyrrhic victory, and the United States is, basically peaked out somewhere around 1956. And it's just been all downhill. But that's how empires usually go. They last 200 to 400 years, and we're right in the middle of it. Just ask the British. The sun never set. It only took 30 years, and I think they filed bankruptcy in the 70s. 10-year notes, same thing. We're all rolling over. 5-year notes, this, euro dollars, same type of deal. You pull the money out of the system, you choke off. I am kind of bullish here on gold and silver.